Japan is really misunderstood because people, as I say, treat Japan like a basket case. Now, it's absolutely true that the Japanese government is beyond bankrupt. It is completely unsalvageable. So they were the first into this debt deflation mess. The Japanese loss of wealth from '89, their equity market collapsed and their property market collapsed. The twin loss of value between equity valuations and property valuations was the equivalent of 2 American Great Depressions. So it's like they experienced the 1930s once and then experienced it all over again. If you think about the logic of having an indexed approach to bonds, what that's basically saying is, whichever is the largest bond market in the world, I need to own more of that than any other market. But by definition, the world's largest bond market is the world's most heavily indebted nation. So that's nonsense on stilts. Now, I stress that because every pension fund in the country likely owns that bond. So every pension fund in the country incurred a drawdown of nearly 100% on one holding in its supposedly inflation-linked debt. That is what's capable of happening in the bond market if the government loses control of fiscal policy or monetary policy or inflation. My sense is that a lot of Britons are waking up to the fact that this government is not just incompetent, it is deliberately trying to execute a controlled demolition of our economy because nothing else makes sense. The whole system is completely corrupt. Now, I naively thought in 2008 that problem of corruption was limited to the financial system. What subsequent years have clearly revealed is that that level of corruption and gross immorality is also present in the pharmaceutical sector, it's present in the big media, the legacy media sector, it's clearly present in government, it's ubiquitous, it's in everything. Central banks are not what we're led to believe. They are a private, for-profit, money-making scam, and it's basically a cartel. And as my friend pointed out at the time, even at the height of the Second World War, the BIS, the Bank for International Settlements, the so-called central bank for central banks, the BIS never dared touch Germany's foreign reserves. So that was like a precedent that got broken for Ukraine. The euro will fall apart, it's only a question of time.
I'm your host, Farzin Irani. Let's connect the dots. Our guest today is Mr. Tim Price, Director at Price Value Partners. Tim has spent over 30 years in the capital markets working as a multi-asset portfolio manager and a 2005 winner in the UK Private Asset Managers Program. He is also the author of Investing Through the Looking Glass, a rational guide to irrational financial markets, and the co-host of State of the Markets podcast. Welcome, Mr. Tim Price. It's an honor to have you on the show today.
Thank you very much for having me, Farzin.
It's always a pleasure, mate. In your own words, just for our audience to understand who Tim Price is, could you give us a bit of a background on your career and where are you up to this point?
Sure. Excuse me. So I came into what we call the city here, the square mile in London, by accident in 1991. Read English at university, intended to go into media, couldn't get a job in media. So in a weird twist of fate, I ended up working for the first 10 years of my career as a bond salesman for various international banks, firstly Japanese banks, and then more latterly French bank Paribas, American bank Merrill Lynch. And so I had 10 years in the fixed income markets, which for someone without an economics background was quite healthy, quite helpful, because if you have no economics background, the fixed income markets teach you quite a lot about mainstream stuff like GDP, inflation, all these big kind of macroeconomic themes. So that gave me a background in experience that I didn't have by way of economic training. And then around 2000, I switched from the institutional fixed income world to the private client world. I moved internally at Merrill from Merrill institutional to Merrill private client because I got bored of bonds, but I still wanted to stay in the market. So for the last 25 years, I've been involved with private client portfolio management, and making that shift really, that's when the scales fell from my eyes. So the problem, I think it's a serious problem with the institutional financial world, is that you get increasingly siloed. So, for example, people I worked with at the start of my career, they'd start as, say, generalist bond traders. And then after 5 years, they'd be trading 2.5 to 3 year German short-dated government paper. An absurdly small subset of the bond market universe. And another example is when I went to see some of my former colleagues at Merrill Lynch around the year 2000, when, of course, we had the big dot-com boom. These are guys I would trust implicitly to manage a bond portfolio because they knew the bond market. But when I started seeing some of the horror shows that were their private equity portfolios, there was no crossover. So the beauty of the private client world, and which I'd recommend for anybody that's sort of intellectually open-minded and curious about the world, is that basically all human life is there. As a bond salesman, I was a generalist, so I could sell government debt, corporate debt, floating rate note paper, emerging market debt, whatever, CDs, that kind of stuff. But you move to the private client arena, and all of a sudden you can do literally anything. You can trade debt, invest in, I should say, debt, any form of listed equity, private equity, hedge funds, alternative investments, commodities, currencies, the works. So if you're really curious about the world, you can really go to town. So that's been the world I've inhabited for the last 25 years or so. And I was fortunate enough to be able to set up my own business in 2014. So I now do it with a small team of people here in London. But it's a bit like when Buffett says that he would skip to work in the morning. I genuinely enjoy this because it's like playing a game, one of the best games in the world with some of the best players of that game in the world. And if you enjoy what you do, you don't even need to get paid for it. So the pay is just a bonus.
And the time when you started in the bond market, wasn't that when bonds were seen as a safe haven after the 1980s?
For sure. So
want to talk about?
It's a very good point. So there's two aspects to that I'd highlight. The first was working for the Japanese gave me an insight, some limited insight, because I wasn't very experienced at the time, but it gave me some insight into the Japanese bond world. So Japan has been written off as a basket case by most investors now for all of my career. So their equity market peaked in '89 and has only comparatively recently recovered. But Japan is a fascinating sort of test case. There's a fund manager I met around 2000, and I like to squirrel away cheesy quotes so I can use them like a squirrel and bury them and then bring them back later for use. And he said something that's always stuck with me, which is he was a Japanese equity manager. And I said, this is around the turn of the millennium. And he said, Japan had been the dress rehearsal. The rest of the world would be the main event. And those words have haunted me ever since. And Japan is really misunderstood because people, as I say, treat Japan like a basket case. Now, it's absolutely true that the Japanese government is beyond bankrupt. It is completely unsalvageable. So they were the first into this debt deflation mess, this debt deflation trap, 30 years ago. But the perversity of it was that I was working for the Japanese in London. And when at the start of my career, if memory serves, Japanese government bond, JGB yields was something like maybe 6%. And you'd think with the explosive issuance in Japanese debt as their economy imploded after the equity market and the property market collapsed, you would think that Japanese yields might have gone higher because they had to issue so many of them. That's not the case. So shorting Japanese paper became the so-called widowmaker trade. So Japanese government bonds their yield went from 6% to 5 to 4 to 3 to 2 to 1. And I think they actually troughed at something like minus 0.5%. They went negative. And you'd think this is during a period when the government is building up extraordinary liabilities. It didn't really make any economic sense. Anyhow, like I say, the Japanese experience was so interesting to see firsthand. And Japan remains, I think, the most misunderstood market in the world. The perversity of it is the Japanese government is bankrupt. The Japanese state is completely bankrupt. They've got one of the worst debt to GDP ratios in the world. But, and here's the big but coming, the Japanese households and corporations are amongst the most solvent in the world. So you've got this complete mismatch between the health of the private sector and the diseased state of the public sector. And again, I stress that it's been misunderstood, but it's so relevant given where we are now in the global interest rate and the economic cycle. The Japanese loss of wealth from '89, their equity market collapsed and their property market collapsed. The twin loss of value between equity valuations and property valuations was the equivalent of 2 American Great Depressions. So it's like they experienced the 1930s once and then experienced it all over again. Now, that is an extraordinary state of affairs. And the reason I highlight that is because if you could imagine that loss of wealth occurring in a Western economy in America, say an Anglo-Saxon economy like America or the UK, or probably anywhere in Europe, there'd be riots on the streets. But in their defense, say one thing about the Japanese, they are stoic. They have a capacity to suffer, which is beyond, I think, anything the West is capable of. So whereas Japan could survive that, and now the Japanese equity market has largely recovered, where it'll go in the future, time will tell, but we think the Japanese market remains relatively cheap internationally. But I simply highlight the fact that Japan had this extraordinary, unique experience. And if my fund manager friend from 2000 is correct, they were the dress rehearsal. The rest of the world is going in maybe the same direction, or maybe has already been in the same direction, because in bond market terms, the analysts, the strategists we probably like, certainly I like the most, a guy called Russell Napier, who you may well know.
Yes.
And Russell's thesis, which I completely endorse, is that bond yields basically reached their all-time low about 4 or 5 years ago, basically during COVID and the extraordinary monetary stimulus that accompanied the lockdowns. And so if you take that argument, then basically bond yields enjoyed a secular bull cycle from the early 80s through to, say, 2020. That's unrepeatable. It's never going to happen again, not anytime soon. So his advice to any investor is avoid bonds like the plague. Bond yields are going higher on a secular basis. You don't want to touch them with a barge pole. And so we clearly agree with that thesis because we don't own any debt for our clients. And that's interesting in the context of an environment where for most private client managers, they have what's called they maintain a 60-40, so-called 60-40 portfolio. Namely, they typically allocate 60% of a private client portfolio to stocks. Worse, that it's indexed. That'll be nearly all American stocks. It'll be like Mag 7, the big high-tech companies. And the 40% will be in bonds. We think that's going to be a disaster. So suffice to say, we don't back that call whatsoever.
Hey, Tim, wasn't that a disaster just last year already? Because I think in the history of the 60-40 portfolio, I think, was it 24 or 23?
It could have been last year, but you're right that the whole validity of the thing is now under question. So there's a big black cloud hanging over the validity of the 60-40 portfolio. The 60-40 portfolio assumes that both stocks and bonds basically go in the same direction, or i.e. up, or that if one market goes one way, the other market will counter effect that, will offer a degree of complementary behavior. If stocks zig, bonds will zag, or vice versa. The problem for the 60-40 portfolio is that, firstly, roughly 70% of the world market cap is now basically the US market. So there's this huge cost, just like Japan in the 1980s. So history
there's a 4 trillion valuation just come out
just
for
for
Nvidia.
Apple or Nvidia.
It's
Exactly.
ridiculous.
So it is. I think it is an accident waiting to happen. But it's even worse when you consider the bond side of things. Firstly, we think we're in a bear market, a long-term secular bear for bonds now that began about 4 or 5 years ago. But worse yet is the logic of doing that on an index basis as well. If you think about the logic of having an indexed approach to bonds, what that's basically saying is, whichever is the largest bond market in the world, I need to own more of that than any other market. But by definition, the world's largest bond market is the world's most heavily indebted nation. So that's nonsense on stilts. So the equity valuation is problematic. The bond valuation, I think, is bad at a valuation level, and it's bad at a philosophical level, given the way money is managed these days. So the whole thing is just shaping up to be a complete nightmare, I would argue.
Yeah, totally. Yeah, thanks, Tim, for that. I totally agree. I think fund managers used to say 60-40 because maybe there's an inverse correlation. If your stocks went down, people would flood into bonds, which is seen as a safe asset. And that's what you've just highlighted for our listeners and our viewers, is essentially what worked since 1980 till about the 2022.
It was great for 40 years. It was absolutely great for 40 years, but it's ended. And as a sign of how bad the damage can be, the year that we had the short-lived Liz Truss administration here in the UK, where we had, I think our administration only lasted a few months, but she launched a mini budget with Kwasi Kwarteng. I think both of them get a bad rap. So I think they were stitched up by our civil service, and they were stitched up by the Treasury and the Bank of England. Nevertheless, the reason I cite that is the year of that, of which the Liz Truss administration, I think, was like the last few months of the year. She launched her mini budget, I think, in the autumn. Between January and autumn of that year, which I think was either 22 or 23, there's a 50-year inflation-linked UK government bond. We call them gilts. There's a 50-year inflation-linked gilt. Between January and autumn of that year, that gilt, that so-called risk-free rate UK government bond, lost 85% of its value. Now, I stress that because every pension fund in the country likely owns that bond. So every pension fund in the country incurred a drawdown of nearly 100% on one holding in its supposedly inflation-linked debt. That is what's capable of happening in the bond market if the government loses control of fiscal policy or monetary policy or inflation. If you think then we're entering a secular bear, that's why you don't want to touch bonds with a barge pole, in our view.
I think, obviously, as you know, I get interviewed on a show called Money Talks as well, and I've repeated this several times. We going into a sovereign default. Now, which country defaults first? We really don't know. Maybe it's on the outsides because people are talking about the US dollar collapsing, and I don't think so. It's a deep and liquid market for the US dollar, and everyone needs them for now, at least till the BRICS comes about. But my view has always been it's either Japan going first or a European country, because as you said earlier, when they had bonds, they were the two, and Switzerland included, who went to negative interest rates. And as you highlighted to our audience as well, when you've had bonds sitting at negative interest rates, obviously the price goes up because it's inversely correlated. And now that the central banks have started increasing interest rates because of inflation, obviously the bond value goes down. And you just gave us a recent example of 85% in Liz Truss. And pension funds, and I've mentioned before to my listeners on my shows, is your insurance companies also. And this other wealth funds are holding government bonds because they were seen as the safest asset.
It's
not that you mentioned this.
Sorry to interrupt, Farzin. It's worse than that. It's not just that they perceive bonds to be, pension funds perceive bonds to be a reasonable investment. They're forced to own them by the regulator. That's certainly the case here in the UK, and I suspect it's the case internationally. Because I remember going back to the global financial crisis of 2008, and around that time, I think I'm correct in saying that there was a Dutch pension scheme. I think it was a glass blowers union, but either way, there was a small Dutch pension scheme, and they had holdings in gold. And the Dutch regulator says, no, you have to sell this risky gold and replace it with low risk, zero risk Dutch state loans, DSLs, or Dutch government bonds. And the pension fund took them to court, and my belief is that they won that case. In other words, they told the regulator to go play in the traffic. This is the problem, that when you've got heavily indebted. So this is really getting us to the essence of the problem. My thesis would be that there is now so much government debt in the world, it can never possibly be paid back. So the question is, for all of those governments, includes the US, the UK, most of the EU, Japan, China. It's pretty much everybody, with the possible exception of some Gulf states and maybe one or two well-run Asian economies. But by and large, this is a global problem. If you accept that thesis, then there are only three possible options. Option one is that you try and engineer enough economic growth to keep the debt serviced. That's what Trump's trying to do. He may pull it off, but because he's also now apparently added another $4 trillion to an already unpayable $37 trillion of national debt, I think he's probably screwed the pooch on that one. The second option is that you default. Now, you won't call it a default. You'll call it something like a restructuring or a debt jubilee. But the bottom line is we live in a credit-based economy. If any major government defaults on its debt, that is Armageddon, because you've got 2008 to the power of 10. So let's park the default option. What does that leave? That leaves option number three, which happily is the wrong word, coincidentally is also the option that every heavily indebted government throughout all of recorded history has resorted, which is inflation. You inflate it away. So people are massively missing the point when it comes to what inflation really is. Inflation is not, first and foremost, a rise in the price of goods and services. That's a second order effect. Inflation, first and foremost, like Milton Friedman says, is an increase in the money supply. Inflation is always and everywhere a monetary phenomenon. Or in the words of Ludwig von Mises, who's one of the most celebrated so-called Austrian school economists, inflation is not a disease or something like an act of God. Inflation is a policy. Inflation is being quite deliberately baked into the system because it's the only way these governments can pay their way now. In other words, they won't default on their debt. They'll just pay you back with devalued money. And that's been the case since the Federal Reserve was established in 1913. The purchasing power of the US dollar after the Fed was established was to try and protect the value of the dollar. It's one of its mandates. The purchasing power of the dollar has fallen by something like 98 or 99%. Good job, Fed.
Yeah, I was. You've already gone there. So can you explain? Because most people think inflation is a given, and it's such a great thing that when we have inflation, I'll get a pay rise. But most people don't understand it's part of the system. It is the way the system is designed and to serve the governments and the central banks. I had a question exactly on that for you. Would you explain MMT to our audience and how it benefits governments and how it actually adds to the inflation and plays a detriment to the average person?
Yeah, my understanding, so I haven't followed MMT in any great detail because I prefer not to waste my time on things that are palpably mentally deranged. But in essence, my understanding of MMT is basically you never have to worry about defaulting on your debt in your own currency because you can always print more. But that's an absurd argument because there's always a point at which the market just repudiates your debt and stops playing. And I think we're very, very close to that level now globally. And I mean, for example, we had a story overnight, I don't know if you saw, but we had a story here overnight in the UK where the story allegedly is that someone in the security services accidentally sent an email with a whole bunch of names of Afghan people on who may have been working with the UK military. And as a result, it's going to cost us something like £7 billion to deal with this issue. But it probably isn't an easily soluble problem anyway. But the bottom line is it's that figure of 7 billion that came out of nowhere. The government slapped basically orders of secrecy on it. So no one knew what was going on. Didn't involve Parliament. So the whole thing was basically behind closed doors. That's the kind of nonsense that government pulls. But you can't keep doing that forever because ultimately the taxpayer will just become exhausted. You will literally exhaust the tax base. So I think the flaw in MMT is it assumes that the market can be infinitely tapped for the issuance of bonds. That's not the case. You only have to look at the history of Latin America or even parts of Southern Europe like Italy. Basically, whenever governments get into real difficulty, they just change the terms. They just default either on the debt or they basically change the terms of the currency. So you wake up, so you go to bed on a Friday night with 100x, whether X is lira or whatever, pesetas in your account. And then the government decides, oh God, we've really messed up on this one. On Monday morning, you wake up and your 100X has either become 50X or it's become 100 new X, and new X is worth 100th as much as the X was. So you've basically lost everything because the government can't balance its books. So there's no free.
Yeah, they just chop off a few zeros, right?
Exactly. And I don't have one on me, but I used to carry around a $100 trillion Zimbabwe dollar bill. And I once asked my then young niece, who was probably about 6 or 7 at the time, listen, you can have one of these. You can either have the $100 trillion or you can have this 1 ounce gold coin. What would you rather have? And of course she said, because she saw the zeros on the dollar bill, she said, I'll have the $100 trillion, please. But it's utterly worthless. Or it's even worse than that. It's worth more as a souvenir than it is as money, because the money is clearly worthless. And this is the problem that the MMT is, to my understanding, assume that the government can never default or it can always fund itself. And that's simply not true. It's Zimbabwe economics.
There's obviously Venezuela as well. I wanted to touch up on this because I sometimes bring to my audiences perception that if you think a share market's going up, the share market's doubled or tripled, the Venezuelan share market has gone up, let's say 300x, but their currency is depreciating. So it's what is the yardstick that you value a certain asset against, rather than just saying it's gone up by this much, because obviously we have most of our audience in New Zealand and Australia and Canada and around the world. But New Zealand, Australia, the housing market has been going crazy for the last 40 odd years, obviously because of a lot of liquidity into the system, the banking system with fractional banking, just creating money out of thin air against mortgages, and the central banks, as you said, reducing interest rates to make it easy. Now, you're sitting in the UK, so I'll ask you from a UK perspective because we've obviously talked about governments and stuff as well. Where do you think do you think firstly the average person in the UK can see through what is going on? Are people waking up? And also, is there confidence in government breaking down in the UK? Because I hear from some people and I read some articles, there are people who are distrusting the government or saying, why are they doing this? It doesn't make sense, whether it's open borders, whether it is flipping, flopping on policy, or whether it's to do with purposely going to war or even reversing the Brexit. What are your views on what's happening
Yeah,
there?
those are very good questions. I think to address the second one first, I think I would. There's a lot of sort of personal bias involved in this stuff, so it's very difficult to be completely objective because I despise the current Starmer government with a real passion. In an ideal world, they'd all be executed for treason, but maybe we're not living in an ideal world. But hopefully, I just hope they get what they deserve. Let's put it that way. And if the courts don't work, I suspect the logic of the streets may yet come to weigh
I
in.
don't think the courts will work. They've been compromised.
The courts seem
people's
to be
court.
compromised. The whole judiciary seems to be
Yes.
compromised because there's a gentleman I first met in 2000 called Sean Corrigan, and Sean's one of the higher profile Austrian school economists I know. And I got two things from that meeting. We met in the city, as I say, 25 years ago. And he mentioned two things to me, and they're both relevant to what we're talking about. The first thing he said was he mentioned just in passing that the idea of anthropogenic climate change, that is to say that human activity is impacting the climate, is complete nonsense, which I agreed then
I
and
agree.
still agree now. And the second thing he mentioned was it was a phrase he used which I hadn't heard before, and it was a phrase attributed to I think an Italian philosopher called Gramsci, and it was a phrase, the long march through the institutions. And what I understand, I haven't read the original, but I think the meaning of the phrase is basically Marxists tend not to win wars because they're not very good at fighting. So what would happen instead is that the long march would get to its conclusion by infiltrating every arm of the state, that is to say, education, the judiciary, the police, parliament. And I think that's really what accounts for where we are in much of the West now, certainly in the UK, to a lesser extent elsewhere in Europe. Trump maybe has kind of short-circuited that because clearly America was going in a very bad direction under the Democrats, but Trump seems to have sort of, for the time being, short-circuited some of that. But here in the UK, we've got Marxism alive and well and red in tooth and claw. So I think, yes, my sense is that a lot of Britons are waking up to the fact that this government is not just incompetent, it is deliberately trying to execute a controlled demolition of our economy because nothing else makes sense. It doesn't make sense to have an energy policy whereby you turn off your gas stations, you don't build new nuclear power installations, you close down your oil and gas fields in the North Sea, and you replace them with windmills. I mean, that's just fantasy. That's just clown world. And I personally think Ed Miliband, who's our Energy Security Secretary, should be sectioned under our Mental Health Act.
Do you think this is something to do with, obviously, this started off with the 2019s and the COVID and all of that? Did they see the end of the financial system coming? And do you think everyone's to blame? Like, not everyone, I mean the big stuff, the big pharma, the big government, whether it's the World Economic Forum or the BlackRocks, they're all working behind the scenes to purposely, as you said, and I can see it through as well, they're purposely doing brainless stuff and kind of blaming a boogeyman out there, whether it's the Russia or the Chinas or it was a virus or bad Iran. Do you think they're all working together to collapse the system because it's coming to its natural end?
I think that's entirely possible. So I had the very good fortune in 2020 and during COVID and clearly in the years following the lockdowns, because of co-hosting the State of the Markets podcast, we had access to some excellent guests who were certainly ahead of me in their understanding of what was going on in the world. So one of those guests is, I don't know his real name, but his pen name is Fergus O'Connor Greenwood. And he wrote a book called 180 Degrees, Unlearn the Lies You've Been Taught to Believe. Now, I came across that book via a video interview with a chap called Richard Vobes, in, I think, 2022 or 2023. Either way, that book, 180 Degrees and Learn the Lies You've Been Taught to Believe. As soon as I saw the interview with the author, I went out and got a copy, and I binge read it over the course of a weekend. I would happily concede that it's the most intriguing book I've ever read. It's possibly the most unsettling book I've ever read. But it's a must read. If you want to try and understand what's going on in the world, you have to get a copy of that book, 180 Degrees. The author is Fergus O'Connor Greenwood. You can get it on Amazon. Anyhow, because of the State of the Markets podcast, we had access to a lot of people who were quite bright and worked out what was going on certainly ahead of me. And another one of them was a guy called Nick Hudson. And Nick Hudson is a South African actuary. And he's involved with something called PANDATA, Pandemic Data and Analysis. And he realized pretty early on, and an actuary clearly understands statistics, right? He understood pretty early on that, in his words, the whole COVID story was simply, in his words, it's a bunch of malarkey. It was just nonsense. None of the narrative stacked up. So there's clearly something going on. The extent of it, I don't think we'll yet be able to piece together for quite some time. But from a purely personal perspective, as a financial person, I've been in the financial markets all my adult life, so I should certainly get out more. But nevertheless, that's been my experience. And so 2008 was clearly a seminal event. It became abundantly clear in the aftermath of the Lehman failure and then the global depression that very nearly set in, that something had gone very badly wrong with the banking system. And we know what it is because the whole system's been, it's fallen into regulatory capture. So in other words, the regulators who are supposed to be regulating are actually just in a building with a revolving door with bankers. So the banker leaves, becomes a regulator becomes a banker, et cetera, et cetera, et cetera. The whole system is completely corrupt. Now, I naively thought in 2008 that problem of corruption was limited to the financial system. What subsequent years have clearly revealed is that that level of corruption and gross immorality is also present in the pharmaceutical sector. It's present in the big media, the legacy media sector. It's clearly present in government. It's ubiquitous. It's in everything. And I think, so that's really what the last few years have taught me, which is, I read a commentary on this a little while ago. Reagan once said, when talking about the Cold War and dealing with the Russians, I think it was Reagan, he said, trust but verify. But I think the problem we've got now is worse than that. So I think now the default stance is to distrust and verify. In other words, you shouldn't accept anything anybody tells you, but you should try and verify it nevertheless. Because we're living, if this is a kind of weird, fifth generation war of some kind, or maybe World War III, but it's clearly not being fought in conventional terms. It's not being fought with bombs and bullets necessarily. It's being fought with alleged vaccines that are actually experimental gene therapies. It's being fought with misinformation. It's being fought with propaganda. And it's probably also a spiritual war as well. It is abundantly clear that the powers that be have a real problem with Judeo-Christian culture. Because one thing I remember from the lockdowns was that the people who were first to get hit and beaten under the cosh and closed down with the churches. That is not normal behavior. So something very strange is going on in relation to religion, where we're all being replaced by third world economic migrants.
Yeah, first, just before I forget, the other day I heard something.
I admit.
There were so many points where I wanted to come in, but you were on a roll and you're just brilliant, Tim. So I'll just let you carry on. But you said something about the revolving doors, and I read something, obviously, your ex-Prime Minister, Rishi Sunak, used to work at Goldman Sachs.
And he's gone back.
Yes, exactly right. So he becomes Prime Minister, tinkers a little bit with policy, and goes back to a nice, hefty paycheck at Goldman Sachs. The same thing happens with revolving doors, as you said, in pharmaceuticals as well. But also, you mentioned the 2008 global financial crisis, when obviously, I think it was Paul Hansen, who used to be in the Treasury, but before that, he used to be at Goldman Sachs. And obviously, then as soon as they finish a little policy stint, they walk out. You mentioned the global financial crisis. In my view, at least personally, I've seen that is when things change, and they thought, okay, the system just cannot be fixed anymore, because after that, it gave them an excuse to go to negative interest rates. But in spite of that, people in Europe, what I saw was wallets shut off, even in Japan when they went into negative interest rates. Maybe in some countries, people borrowed more. But I think that's when they realize, even if you go to negative interest rates, people aren't borrowing because, as I see it, is the central bank only has one lever. Two levers. One is the interest rate lever, which goes up and down, and the other is flooding the system. Can you talk around the central bank's hand in
Sure.
the economy and the evils and most of the misconceptions that people have
like you
about
said,
money?
misconceptions is the right word. So there's an excellent book, The Creature from Jekyll Island, by a guy called Griffin. And if you asked most people and said, what is the US Federal Reserve? They'd say it's the US Central Bank. It's the government's central bank, monopoly on money, etc., etc. This is not true. As The Creature from Jekyll Island makes abundantly clear, the Federal Reserve is simply a private banking cartel, and Goldman Sachs will be one of the shareholders of that cartel. So it's no surprise that everybody got bailed out, bar Lehman Brothers, during the crisis, because they were basically bailing out each other. Probably most central banks are formed in the same way. So they masquerade as being agents of the state, but the reality is they're private. They're consisting of private banking interests, probably involving the Rothschilds, who have a background in pretty much every central bank in the world. So central banks are not what we're led to believe. They are a private, for-profit money-making scam, and it's basically a cartel. So that's the first thing to point out. Central banks are not what we're led to believe they are by the media and by central banks themselves. Secondly, I'd go further and say the very concept of a central bank is redundant. If you believe in a free market system, you don't need a centralized monetary authority. So one of the tragedies of the 20th century is that the 20th century pretty much put to death the idea of the centralized state. They tried it in China under Mao. They tried it in Russia. They tried it in Italy under Mussolini. The centralized big state does not work. It doesn't work for a very straightforward reason. The free market is the best system that humanity's ever designed for the basically accumulation of wealth and the distribution of wealth. So people assume that free market capitalism is bad. It's not. It's the best system we've ever had. The moment that you start having technocrats, monetary technocrats, say like central bankers, pulling the levers, the system's going to go wrong. And that system will clearly reward first those people who are basically closest to the money. So there's so much to talk about in relation to inflation, and nearly all the narratives are incorrect about it. Anyway, so central banks, I think, are evil and they should be disbanded, but that's going to take some time.
I think Ron Paul in the US obviously wanted to end the Fed itself, and there was some murmurings around Elon Musk and Trump at the start saying, at least let's audit the Fed to see if there's 8,200 tons. 8,200.
I got a good one on this topic, which is there's a friend of mine called Dominic Frisby. He's you may have heard of, but he's a Renaissance man. He's a stand-up comedian. He's a voiceover artist. He puts together comic videos. He's written books on Bitcoin and tax and finance. He's a really Renaissance man. And he told me this joke the other day, which is that someone goes up to President Trump and says, "Mr. President, we've done an audit of the gold at Fort Knox. There is no gold at Fort Knox." And Trump says, "What do you mean?" He goes, "Mr. President, there is no gold at Fort Knox." To which President Trump replies, "Double the guard." And that's the whole nature of this game, that it's all smoke and mirrors and perception and narratives. But my humble thesis would simply be that we would all be better off without central banks. And when Ron Paul was asked, what do you replace the Fed with? I think his response was, well, when you remove the cancer, what do you replace that with?
Nothing.
So there's this huge misperception about what central banks do. They do not act in the best interest of the people. They act in the best interest of the banking lobby. End of.
Yeah, but exactly. That's why I said misconceptions, right? People don't even understand how money comes into creation, and just the paper notes.
Just to circle back to 180 degrees. That is one of the many topics that book covers. So as I say, I have no agreement with the author, so I'm not being paid to recommend his book. But it really is such an eye opener. And it's also an eye-opener on the topic of money, because people simply don't understand where money comes from.
They don't. That's one of the biggest misconceptions. And everyone, I think what I keep saying is 50% of every transaction in the entire world is money, because somebody exchanges their services or their product for money. And we're purposely not taught that in school. Definitely not taught that in school. We're taught to do jobs where we can earn money, but nothing about money. While you mentioned that book, 180 Degrees, just to have some fun and let the audience a little bit of a teaser about that book. What are some of the things that he mentions in there,
Have you got a spare
which
couple
people
of
should
days?
have a yeah, but just give us a
Okay,
quick,
so
brief view on some of
if you
those.
get this book and you read it with an open mind, you will start to have misgivings about the official narrative for 9/11, for the moon landings, for every major war that's ever happened. You'll start to think more carefully about the narratives over terrorist attacks, so-called terrorist attacks. You'll start to think about issues like false flags. You'll start to reconsider the role of central banks in the global economy. I struggle to think of a topic that he doesn't address at one point or another, and clearly COVID as well. So basically, to reiterate the subtitle of the book, Unlearn the Lies You've Been Taught to Believe, his argument is essentially that actually we've been lied to collectively about just about everything, just about forever. And this goes back not just decades, but hundreds, if not thousands of years. It's a real eye-opener. I say you have to read it with an open mind, and I'm not claiming that everything in it is necessarily as per Fergus's narrative, but it is such a tsunami of what I suspect is reality and truth. A lot of people will find it deeply upsetting. But this takes us into the realm of the matrix, which is, would you rather live the lie or would you rather face the truth? And not everyone is ready for the truth yet.
Not everyone's ready for the blue pill either. So, hey, on that topic, because you touched a couple of things, I'm interested in a bit of COVID because not a conspiracy theory, but because I have this feeling because this podcast is called Connecting the Dots, and I want to connect some dots. When I was being interviewed on a show called Money Talks, what is my view of why COVID came about? Or okay, if you believe it was just a pandemic, or I think it's a pandemic, because it was planned because of certain things happening behind the scenes. What are your views? Because I think the way I saw it is governments have a problem, especially in the West. Because at least in the East, as you said, it's a trust thing, right? Government, currency or money, everything is trust. In the West, people believe their governments have their back and have their best interest with free healthcare, free education, all of these promises. At least in countries like India, Venezuela, Mexico, some of those maybe up and coming countries, they know their country lies. That is why their currency, the government lies. So they know their currency is depreciating because of that, because they've seen it time and time again. In the West, we've kind of had it a bit too good. And the way I saw it is there's these false promises that were made, or are made still, where the Western governments tax you your entire life, and at 60 or 65, depending on which country you're in, you can retire and the government promises you superannuation. We have a cliff coming up in a lot of these Western democracies where people are aging, and the supporter base for the tax base, the younger generation just isn't there. And my understanding or me connecting the dots was maybe this is a way of reducing the older population. Unfortunately, obviously, with people who went to hospitals, a very few smaller percentage of them came back. So my thought was maybe governments reducing their risk liability, obviously. Maybe if it's a conspiracy, I'm just putting a conspiracy hat on to just question those kind of things. And then if not because of that, unfortunately now a lot of younger people, I know people because I travel to India and the Asian countries as well, a lot of people are dying here. And something I saw recently in India was they're trying to justify it with a documentary saying it's the Indian diet and too much stress in today's world. What are your views? Could that have possible? Or how do governments get out of this problem where they've promised the promises they cannot keep now?
It's a good question. The two people I would cite, first is Edward Dowd, who you probably are familiar with. He's a Wall Street guy who's written, I think he's actually written a book on this topic, but he's certainly written extensively about the nature of like the fiscal problems in the States and the pension age and the fertility statistics. So if people don't follow Ed Dowd, they probably should. I think he's on Twitter or X. The other one is his Twitter handle is @capitalist@exp. He goes his Twitter or X identity is Capitalist Exploits. He's a hedge fund manager called Chris McIntosh. You should have a look at his pinned tweet from a few years ago, because in about a thread of about 10 or so posts, He itemized exactly why COVID happened, why lockdowns happened, and why everything else has happened. And he joins the dots perfectly there. If you have trouble finding it, I'll send you a link to it, so you can maybe link to it in the show notes.
Yeah, please do.
That,
Please do.
that,
But I know Chris McIntosh used to be sitting in New Zealand for a time, South African. Yeah, yeah.
So I think let's just say I fear that he is correct in most, if not all, of those assumptions, and that because it makes perfect sense. And I think just to summarize the argument, it's like imagine if you were one of the elites in 2019 and you could see the stability of the global monetary system literally collapsing in front of you. It all comes back to the debt. There's too much debt in the system, and at some point, that debt mountain is just going to that debt volcano is going to explode. So there's a plausible thesis that what was done in 2020 was in part to like forcibly shut down the economy and then stop printing money like there's no tomorrow to buy a bit more time. But what also happened in that process was there was a huge transfer of wealth, probably the biggest wealth transfer in history, from poor people to rich people. So if you were poor or you were running a small business, you were basically shut down. And so if you had any money left, all you could do was basically spend it on Amazon or Deliveroo or Uber or whatever.
Yeah, yeah. The big stores, supposedly COVID never entered the Walmarts. It only
will affect
somebody in a small business.
And also, the last place you want to keep open is a gym during a health crisis. The last thing you want is gyms open.
Well, not only that, I also thought COVID was geographic sensitive as well, because it was 6 feet. It knew if you were not 6 feet apart in the US, but it was 2 meters in some countries. So it obviously knew.
So COVID adapted to the metric system. I mean, COVID is a very
metric
system virus. And the other thing COVID's very good at is it's very good at identifying relative levels of height. Because if you were in a pub in the UK having a substantial meal, and there was a big debate about whether a Scotch egg comprises a substantial meal or not. But if you were having a substantial Scotch egg meal, sitting down, you were fine. But the moment you stood up, you had to put a mask on. So COVID could quite clearly discriminate between, say, altitude of 5 feet versus altitude of 4 feet. It's such a cunning virus.
And not just that, it was not just that. It actually knew you on your lunch break as well, because you had to wear your mask throughout. But when you're on lunch break, you have to take your mask off.
Well, I think it's very good at finessing timing issues.
Time out, COVID. Yeah. I want my lunch break, COVID. Please time out.
It could also, the other thing also make between whether you were having Jack Daniels and Coke and just Coke. Incredibly sophisticated virus. Probably wasn't that cool, because you need to GMO something that clever, I suspect.
Yeah, I think what I believe was obviously people like you and I, we were in the financial system, we saw the cracks a lot before the fact. But I think what COVID has done is made the common man think twice, at least not all of them. But I think there's about 20 or 25% of the population who started waking up and now starting to question, is the government always doing everything that's in my best interest?
That's a very good point. Because again, when we spoke to Fergus O'Connor Greenwood back in 2023, I made the optimistic judgment, which is clearly a lot of people went for the narrative and may or may not regret having done that. But on the positive side, there were a lot of people that didn't buy the narrative. And my thesis then, and it still remains this, that every day more and more people, and when I say more and more people, we're probably talking around the world, millions of people collectively are waking up to this sad reality of what you can basically say is the equivalent of some kind of communistic coup against the people of the world by a high level elite of criminal psychopaths or sociopaths. There's more of us than there are of them. So over time, as the number of people waking up builds, there's a mathematical logic or a mathematical certainty that the people will win this one, absent some extraordinary crisis intervening. So I'm quite bullish in the long term, but who knows how this can yet play out? Because clearly, whatever is happening has been happening it's been being planned for quite some time. It's not, again, that's what we were talking about in 2020 on the podcast, because the phrase I was using, well, is this cock up or conspiracy? And it became clear in my mind fairly early on that it was so elaborate, so coordinated, and so universally against everyone's interest, it couldn't possibly be a cock up. If it was a cock-up occasion, then make an error in supporting us rather than being against us. but it was always, whatever happened was always basically keeping people down, and it was not in the interest of the populace. So
Sorry to interrupt there, Tim. As you said, something out there, coordinated effort. From what I've seen, as COVID was the start, and the World Economic Forum, and these guys obviously clearly say we've got our global goals or Agenda 2030. The word coordinated that I thought I don't know if you connect the dots with the COVID, it was every country was doing similar things. And if someone moved out of that, they quickly had to come back into the mix and do the exact same thing.
And there were a few countries in Africa where the leaders refused to have vaccination. They were assassinated.
They were assassinated. Yeah, well, Belarus is bad country, and stuff like that. But what I'm just trying to get to is if this is coordinated, obviously, because also the governments are all in cahoots because they're all in debt.
Sure.
Is this something which is now taking us towards more a global governance or a global currency or a global? Obviously,
it seems to be the direction. It seems to be the direction of travel. So the really weird thing about this is that they're not really making any attempt to try and hide what they're doing. Because in other words, this is something that's happening in largely plain sight. An example would be and I'm really disgusted at the use of this word conspiracy theory, which is possibly the most cynical thing that the CIA has ever done, is create this phrase that you can then just use to basically shut down anything that you don't agree with. It's just pure evil. Anyway, part of this is...
But the difference, Tim, just sorry, 1 second. Nowadays, I know the CIA did it back then, but nowadays they say the difference between a conspiracy and reality is give it about 6 months.
Yeah, exactly. Insert arbitrary time period. Yeah.
Yes.
But so an example, a trivial example, there seems to be an element of Satanism across a lot of this stuff. My humble example would be, look at the logo of the World Economic Forum, and there is a stylized 666 on that logo. Now, I don't think I'm over-imagining it. Maybe I'm over-reading something, or I'm oversensitive to this thing. But once you start seeing these symbols, they seem to love symbols and imagery. Once you start seeing it, you can't stop. But either way, they seem to love doing this kind of stuff in plain sight. So the key document...
I think I've heard they've got to tell you, if they're Satanists, they have to tell you what they're going to do before the fact.
The theory is that they believe it gets them out of jail if they tell you in advance what they're doing, albeit in somewhat symbolic way. The same way you get a lot of these things sort of prefiguring in films and TV and stuff. So there's apparently lots of references to, like, burning buildings and burning towers, even in The Simpsons ahead of 9/11, for example. But either way, the key document on this is something called the Sustainable Development Goals of the UN Agenda 2030. And they list basically all the things they want to achieve. And that list is consistent with basically giving people no freedom whatsoever to do anything. Or as the WEF trial ballooned this phrase, you'll own nothing and you'll be happy. Well, I think ultimately what's going to happen is they will own nothing and we'll be happy.
Well, if there won't be Iran, hopefully we'll be happy. And the way I see it is the monetary system's collapsing. They're trying to reduce as much of the population. As you said, there's a few of them and there's too many of us. They're trying to reduce the population before the fact, before the revolution begins, be it with whether it gets COVID, whether it's a cyber pandemic that might come next. Maybe there's another pandemic maybe planned for next year.
They seem to be addicted to avian flu for some reason, which, to the best of my knowledge, doesn't actually exist and can't exist. But the thing is, they're not that imaginative when it comes to it. They keep trying the same tricks.
They try the same tricks, but now obviously they've got an outlet with the war as well. So let's slightly shift towards your views on geopolitics. We'll come to the US last and Trump and stuff like that.
Sure.
But the bigger geopolitical picture with what's happening with the monetary system, obviously the US dollar has been the top dog, so to speak, and the central has been held as reserves by most of the central banks. Where do you see BRICS? Is it a viable enough power that could challenge this in a certain way? Or it's just going to be a multipolar instead of a unipolar now, and we still don't know the mix and match of which countries will become the powers on the other side?
A good question. You already beat me to the punch with the use of the word multipolar. So I think that's really what we're talking about. We're moving from effectively a unipolar world with the US being the hegemony to a multipolar world where you've got China in the ascendant, you've got Europe, which is kind of, moribund, and then you've got the US in, let's say, slow decline. In relation to the dollar, I mean, we're financial people, so ultimately we look at the world through a primarily financial prism. As you say, the US dollar has been top dog, but let's go back a few years to the start of the invasion of Ukraine. As a friend of mine pointed out at the time, and he was way ahead of me on assessing the significance of this, fairly soon after the Russian invasion of Ukraine, the West sanctioned Russia and then basically froze its foreign reserves, much of which will have either been US dollar denominated or actually US Treasury debt itself. And as my friend pointed out at the time, even at the height of the Second World War, the BIS, the Bank for International Settlements, the so-called central bank for central banks, the BIS never dared touch Germany's foreign reserves. So that was like a precedent that got broken for Ukraine. Russia is a nuclear power. It may not be an economic superpower, but it's a nuclear power and it has a reasonable economy and it's got tons of resources. What the Biden administration effectively did by sanctioning and freezing Russia's reserves several years ago was it basically announced to everybody that the US could no longer be trusted as a financial counterparty. So what has happened from that moment to now, and it'll continue, is that the US had national debt stands at $37 trillion and it's going up, it's not going down. When you're that much in debt, you're desperately reliant on the kindness of foreign governments to keep servicing your debt, to keep buying your debt. It is therefore counterproductive to announce to them that you're basically going to behave like a bully and you can randomly start just nicking other countries' reserves, which happen to be your government debts. So what has happened since then and will continue to happen is that the marginal foreign central bank will basically say, stuff you, I'm going to sell my treasury bonds, US treasury bonds, I'm going to sell my dollars and I'll buy gold instead. So funnily enough, what has happened since 2022 is that the US treasury bond yield has gone up, i.e. bond prices have fallen because they can't find sufficient buyers to keep the debt service properly. So that's gone south. And the gold price, as you know, has risen very, very markedly, and I think it will probably continue to do so. So at the moment, it's central banks that are causing that rise in gold. But I suspect at some point, those central banks will be joined by professional investors and ultimately retail investors too. So I think there are ways of, if you like, mitigating what's going on, one of which is to own real assets. So we're quite excited by the prospects for gold, specifically for gold miners, because mining companies generally are probably the cheapest sector of the international capital markets in equity market terms. And we're particularly excited by what's happening with silver, because gold and silver are both monetary metals. That is to say, they have a history of being money. But interestingly for silver, whereas gold tends to be hoarded, silver is actually used up. And for the last 6 years, the silver physical supply has been in deficit. That is to say, the world is using up more silver than it's actually managing to get out of the ground. Plus, you've got a silver price that's still lower than it was in 1980. So you've got a great tailwind for gold. You've got even stronger tailwinds for silver. And if, like us, you believe that we're basically repeating the 1970s, that is fundamentally just a great backdrop for commodities markets more generally. So having focused primarily to date on the monetary metals and mining concerns related to the gold and silver, we're now trying to broaden out our net to encompass things like maybe coal, oil, gas, platinum, palladium, PGM group metals, copper, industrial metals. In the 70s, commodities were the place to be. I think for the foreseeable future, commodities and real assets are also the place to be at a time when you can't trust much else, and you certainly can't trust paper assets or fiat assets.
There's something brilliant. A couple of things I'll just touch on out there and I'll get your views further on that. One was obviously silver. Obviously, as you mentioned, its all-time highs have been about $50 US in nominal terms, so to speak, and it hit it again during in 2011 as well. But it's still sitting at about 30 odd right now. Do you think that there is the possibility of some kind of manipulation in that? Because I think sugar and silver are the two cheapest commodities I look at. And just a second question, do you think silver or gold could actually be allowed to come into the monetization? even if it's by the BRICS and not, obviously we know the US doesn't want to go there and the Western democracies and the banking interest don't
Well,
want
you say that, but
monetize
equally
gold.
there are a number of states, US states, that are allowing gold, the likes of gold and silver, to be used as money. So
Yeah, the states are, but
the government
federally.
may not, but the individual states increasingly warming to the idea of having a hard currency. But on the topic of the BRICS, I really, it's above my pay grade, so I really don't know.
Okay.
But I'd just say more generally that there seems to be an acknowledgement by people that, you know, debt assets aren't assets, they are liabilities. That there is now a big black cloud hanging over the validity of these things. We know the direction of travel. The debts are only going to grow. If the Trump administration, if Trump 2.0 is any guide, we know the direction of travel, which is whatever someone says they're going to do, the chances are the deep state will prohibit them from doing that. So the money spigots will still remain open. The inflationary pressure will continue. That is, you don't want to own, given a choice, you don't want to own fiat currencies at all, certainly naked, as in cash, or with bank counterparty risk, or as expressed in government debt, whereas real assets, which are ultimately stateless, that's first prize. There's so many definitions of gold that I've really loved that people have made over the years. One of them is from a company called Edelweiss in Switzerland, and they've said gold, for example, is not even an investment. It is a conscious decision to refrain from investing until the return of an honest monetary system makes the calculation of relative asset prices possible once again. It's quite a long-winded quote, but it's a very deep one, very profound.
It's perfect.
So there's a lot
It
of
is profound.
And the other one is from a friend of mine, Charlie Morris, who runs a company called ByteTree, which invests in gold and Bitcoin. And Charlie's point about gold is he defines gold as a zero coupon perpetual bond with no credit risk, no counterparty risk, issued by God.
It is God's money, as people say, gold and silver. I wonder what are your views on copper in there? Because obviously you need copper for almost everything, and especially when I said geopolitics and war. If wars escalate, what are your views on maybe things like that?
My sense is that copper's lagged of late, but I think from what I follow of the technical analysts that we follow, copper's starting to perk up. So copper, as you'll know, is often called Dr. Copper because he's so intelligent at analyzing the sort of global macro, the health of the pulse of the world. And I think I'm correct in saying that of late, literally over the last week or a couple of weeks, copper started to perk up too. So this is our thesis is that basically living through the 1970s pretty much all over again. And if I'm correct, I think I'm right, but if I'm correct, gold and silver led the charge back then and then pulled up the whole rest of the commodities sector after them. So all these things are going to rise probably, but they just rise at slightly different rates. So copper's lagged, but I'd be concerned because I can't see what's happening in the world, namely this rush to deglobalization is being particularly good for industrial businesses per se. But notwithstanding that, I think over time, we'd quite like to build a portfolio of most of the major commodities, including copper.
Yeah, I think commodities is the way to go, especially since they're so underpriced. And the other thing I just remembered I was going to ask you, you said mines, right? Mining shares as well. Obviously, they haven't risen as much as obviously the price of gold has recently. And I see a bit of maybe the possibility that they haven't caught on. Obviously, they're slow to the race anyways. But is it because of the jurisdiction risk that some investors might start seeing because of what's been happening in Africa and countries like that?
Yeah, possibly. I mean, also commodities and miners in particular were very out of favor from 2011 through to sort of the late teens recently. So a lot of investors who got burnt on that period of underperformance may never own them again. In the same way that investors that got burnt with all the false dawns in Japan will never touch the Japanese market now, irrespective of whether it's actually good value or not. So I think a lot of times it's simply the issue that investors being human beings are behavioral animals. And as a result, we're not necessarily well guided when we're guided by our emotions.
Okay. Just as I promised, we'll come back to the US and Trump and tariffs and stuff. What are your views? Obviously, I've heard your podcast and your interviews before as well. You were quite optimistic when Trump was coming in. You wish someone like Trump would be in the UK. And I know Nigel Farage is coming about his party's gaining some momentum. And what are your views on Trump? Is it a symptom or a cause of the times that we're in? And I know you are also a fan, just like me, of that book, The Fourth Turning. Would you reveal to the audience where you see, can this system be fixed or needs to be toned down?
I think ultimately it has to be burnt to the ground. So in terms of my enthusiasm for Trump, you can put that down to youthful, wishful thinking on my part. So I did have high hopes. Particularly, the high watermark was when Doge came, and then Elon and Doge were doing their, sweeping clean the Augean stables. But that's obviously fallen apart subsequently. So it seems, and then we've had this stuff about the Epstein files as well. What seems to be the case is that the deep state is so profound that it's like a black hole, and you just can't escape from its gravity, sadly.
Yeah, just while you were talking, because you mentioned Doge in there, I actually had a screenshot. I wish I could find it right now. But when you go to usdebtlock.org, the USA is in debt of 37 trillion, and the interest bills I think I've written it down somewhere, 1.03 trillion interest, defense 912 billion, social security 1.52, and Medicare 1.68. But just below that, I actually saw they now have added a Doge clock, and the savings they have is about 550. I think it's just about 550 billion. And if you look at the next to it, I think savings per citizen is $3,700. And the debt to at the top was about, I think, 250 or $300,000 per average citizen.
I don't think it's only coming back from this. I just think the world of maths is capable of righting this ship. So there's a very good video I'd recommend to anybody who has the time. It's from a guy who died a few years ago, a guy called Professor Albert Bartlett at the University of Colorado in Boulder. And on YouTube, it's called something like the most incredible video you'll ever see, or something like that. But it's basically about the power of compound interest, which Einstein allegedly called the eighth wonder of the world. But it's also the power of exponential, exponential things, and the exponential function. And it's a fascinating presentation. I think Bartlett gave this several hundred times, if not 1,000 times, during his lifetime. But the point he makes is that for any entity beyond maturity, further growth is either obesity or cancer. And that holds for governments, and it holds for government debt as well as everything else. So there comes a point at which you enter the point of no return. I don't think this problem can be fixed now. The only question is, so the way we frame it is, it's not a problem because problems can be solved. It's now a predicament that can simply be dealt with. So I've already said, I think we think the ultimate answer is, and we're seeing it anyway in day to day, which is inflationism. So they're going to try and inflate it away, but there will come a point at which, something like you were saying earlier, asking earlier which country might be first. And there's plenty of contenders. So it could be the US is first to default, could be the UK, could be one of the European countries. My money would probably be, although Japan's a huge basket case, as I say, they're quite stoic. So that gives them maybe a bit extra time. The reason I would probably suspect it might be one of the Europeans is because the Europeans are also locked into the EU, the common currency, which really limits their power of maneuver because you've got a central bank that's trying to dictate monetary policy for 27 different countries, and that's just unworkable. So I hope it's one of the European ones because obviously I was a keen Brexiteer, and it would be nice to get the validity of that decision in the form of the euro falling apart. Because I don't think the euro can hold any more than any other currency. I think the euro is actually in more or less pole position because I don't get the sense that Europe is exactly a bastion of strong economic growth right now. But they're locked into the latter-day gold standard of the euro. So it's not, as a Brexit, it's not our problem anymore.
But as you said, there's 27 countries there, and the thing of adding other countries as well. But it's one common currency. How do you run so many different countries with every government having a different credit rating?
You don't.
The whole Euro project is a fail.
This is something I saw at the very start of my career. So the seminal event for the early stage of my career was in September 92. So the UK had rather rashly, firstly ditched Thatcher, and then under Major had joined the European monetary system, the European Monetary Union. So we were shadowing the Deutschmark. But that was a catastrophic policy because Germany had just reunited. So they had high inflation, so they needed high interest rates. We were in a recession, which in my terms was manifested by not getting my dream job and having to work in the city instead. And so Germany had high inflation, high interest rates. We had a recession, but we had to live with Germany's interest rates. So, hey ho, we're basically ethnically cleansed from the ERM. Best thing that ever happened to us. So, basically, stopped us going into the full blown euro and meant we also had independent monetary policy. The euro will fall apart. It's only a question of time.
I agree. Only a question of time. And then do you think everyone goes back to a sovereign currency? Or, and this is where again my divergence, because I like thinking what could happen and the possibilities before the fact. Do you think they go back to individual sovereign currencies, or this is exactly what the elite want?
They clearly want to globalize everything. So this is I didn't realize it at the time in 2016 when we had the Brexit vote, but the EU is clearly a blueprint for a one world government. It's at the moment a one government for all of Europe, but it's a sort of parasitic life form sitting on top of existing governments. So it doesn't need we don't need it. The Europeans don't need it. The French don't need it. The Germans don't need it. But these self-selected psychopaths, it's a wonderful gravy train for them. So they're not going to vote. They're not going to be turkeys voting for Christmas. But nobody needs the European Union or any of the agencies of the European Union. So I very much hope we go back to the effectively individual sovereign states. But that's going to be a battle royale as and when it finally comes. Because clearly they also want to bring in CBDCs as well, which would be an unmitigated disaster for humanity. So what I hope is the case is that people will see sense. And if we can't get illegitimate governments out through the ballot box, then it'll either be through the court or, dare one say, something darker than that.
Well, my view on that is exactly that. The way I see it is they got the euro to show the world, look how 27 countries, or as they kept adding countries, can come together and live peacefully. And then the project has failed. And I think they wanted to show the euro as maybe this is the same model for having a one world currency. And as you mentioned, even better if it's programmable. So there's no need for geofencing if it's one world currency. Because my view is every country is bringing CBDC, especially the euro's trying to launch it, I think, by September this year. So European capital doesn't flee Europe and move to the United States or some other countries. So if we have one world currency, but the whole thing, as you said, is the project is failing because even countries like Hungary and stuff, when they don't want to do something, they've been forced into it. I think Slovakia's gas was turned off because they weren't sending arms to Ukraine. So the whole point is you don't have a right. Your elected government doesn't have a right to have a say in anything unless it's the European Parliament itself. And that authoritarian model is what they want to shout down on people. Do you think governments will wake up? Because as you said, in COVID also, everything was coordinated. The governments actually fell in line and went along. And what I'm thinking, and please, I want you to add on this, is after the Ukraine-Russia war, Russia went along with COVID as well, so did China. But I think after the Russian funds were frozen, some countries are starting to say, hey, maybe we need our own sovereignty and we can control this. We don't need to go the World Economic Forum, the World Health Organization way, and we can develop or diverge away from this. Do you think that is possible?
Well, as I mentioned earlier, the whole disastrous irony of what they're attempting to do is it flies in the face of history. So every centralized, top-down, totalitarian state government has failed. The economy always fails because it can't beat capitalism. It can't beat free market capitalism. But as the saying has it, you can vote your way into socialism, but you have to shoot your way out, and that's the problem. So I can't. Well, I'm not bright enough to work out how this pans out. But as a libertarian and as a free market capitalist, in currency terms, I say let 1,000 flowers bloom. Now, I don't own Bitcoin personally. We don't own it as a business. In fact, the regulator won't allow us to. But I endorse philosophically the idea of Bitcoin because I think money is too important to be left in the control of the state, which is the same reason why we buy gold, why we own gold, because it's a stateless asset. So in currency terms, certainly my ideal outcome would be, have 1,000 flowers bloom. It's too important to be left to the state. And if the state does intend to form a monopoly over the control, management, issuance, and validity of money, I think it's going to spectacularly fail. My understanding is that every country that's tried CBDC, it's been, it's ended in literally banks being set on fire in the street. So I don't think Europe can pull it off any more than anyone else can.
Yeah, that happened in Nigeria, didn't it? They tried the CBDC experiment.
Had the E-Naira, which I think got ultimately invested in by something like 0.3% of the population.
Yeah, and in I know for the last couple of years I've been traveling in India, and the Indian CBDC has been trialed through banks, and they're forcing government employee salaries through CBDC, but the average person has no idea. If they just log into their banking app, they can see it sitting right there.
Well, yeah, I think ultimately Gresham's law will intrude, and so Gresham's law is basically that bad money drives out good. So you have bad money in circulation, but nobody uses it. We'll revert to barter before that. I would revert to barter before that. No, I'll pay with gold if need be, if people will take it. I'm sure they will.
They will eventually, but exactly as you said, right? And people, countries like India and China, they always save in gold.
Yeah, yeah.
The gift gold, they save in gold. Why do you think the Western, well, I keep calling them Western democracies, but they're not
They're not really
democracies
democracies
that
anymore
much
because they're
anymore.
illegitimate governments that have no
No,
sanction for what they're doing. Got no popular
no,
mandate.
but these Western democracies, why the monetary system or the brainwashing that we've had is central bank good, keep your money in the bank when we know that is the worst thing. Not the worst thing, but
It's all
it's
about
one of the bad
control.
things.
It's all about control. You know, if you can,
Okay.
I forget which of the Rothschilds is, let me control the nation's money, and I don't care who the government is.
Do you think emotional intelligence, because you invest money for people and manage people's portfolios, do you think emotional intelligence plays a part in this field?
Huge part. The stuff that I mean, I don't know whether this counts as behavioural economics or not, but the only other than classical or what you might call Austrian school economics, the only economics that makes any sense to me is the sort of so-called behavioural school, which is I'm trying to think of who I've followed on this in the past, but there's a number of people that have written very good tomes on behavioural economics. You have to know your weaknesses. As Dirty Harry says, a good man knows his limitations. So you have to know that you're, as a human being, going to make mistakes. You're going to get emotional. You're going to get overly excited at the highs and overly pessimistic at the lows. And that probably is a reflection of why what we consciously try and deliver is what we would call sort of Ben Graham style value investing, which by definition leads us to take a fairly long-term perspective on things. So I think there are multiple ways of investing successfully. That what's important for the individual investor is finding one that sits well with their personality. And the one that I think sits well with ours as a small group of people, as a small partnership, is it's one that you invest rationally according to valuation, clearly on the side of conservative stuff with margin of safety and that kind of stuff. And then you try and be patient accordingly. So we've sat with some positions, particularly in commodities related, mining investments for several years. And it's been a brutal period because people have been skeptical about whether it's ever going to work. And then finally it's starting to work. So this year, touch wood, probably will have a banner year in terms of our business because gold's working, silver's working, a lot of the miners are working. We have some other things that we use as well, like systematic trend following funds. They're doing a reasonable job. So, having been patient for several years as we've sort of gone sideways in the doldrums, suddenly it's starting to work. If you had a natural bias towards patient long-term value investing, that makes the course easier. If you're following more of a momentum approach or a growth approach, life is getting increasingly difficult for you. I think it's going to be difficult in the future. And I think one thing we'll probably see in the next few years is, I think if the market is as difficult as we think it's going to become, I think you may well see the high watermark in ETF and passive investing. Because the problem with passive and ETF investing is it's completely indiscriminate. You just buy everything in a sector or you buy an entire market. But there's no discernment to that practice. And I find that intellectually offensive.
Having said that, so you obviously told us what your firm does with certain few things of this, and there's not financial advice. We don't give that on this channel. Let's say if I said, Tim, you have 100,000. How would you break it up?
So what we typically,
given today's time and knowing how this
sure.
might play out over the
So
next
without
months.
putting any specific percentages to these allocations, we would split the portfolio broadly up into three types of assets. We'd invest in, let's say, classic Ben Graham value stocks, cheap, high-quality businesses run by principled, shareholder-friendly management, where the shares are, for whatever reason, trading at a discount to what we think they're really worth. So that's like margin of safety type value. We'd invest in a selection of systematic trend following funds. It is a type of momentum trading approach, but it's one that is the perfect complement to a traditional portfolio because systematic trend following managers can go short as well as long. And they trade everything. So at any one time, they may have investments or trading positions in equity indices, interest rates, currencies, hard commodities like zinc and copper, soft commodities like corn and wheat. And they're basically just following whatever's rising or falling in price. They're perfectly happy to go short as well as long. So they form a key part of our portfolios now. And then the third component part, we've obviously touched on it quite heavily today already, is what we call real assets, tangible, non-financial things that if you drop them on your foot, it hurts. Things like, for example, gold and silver bullion, but also commodities, mining concerns, particularly if they're profitable but very, very cheap. And the combination of those sort of value stocks, trend followers, and real assets is the best combination we can think of to weather the storms of whatever the world is going to throw at us for the next few years. We want inflation hedges, we want crisis hedges, we want systemic collapse hedges. What we don't want is bonds, naked fiat currency exposure, or growth stocks. We think all of those are going to be a disaster.
As you said, it's going to be a disaster. I think these are the times we're living in, as the Chinese say, maybe live in interesting times. I think there's going to be books written about this time in hindsight, where people are just going to talk about this time.
But will anyone be allowed to read them?
That's a good question, because misinformation and disinformation is something the government is really, really concerned about. When it comes from them, it is to be trusted, Tim. When it comes from people, knowledgeable people like yourselves who want to just share an opinion, obviously it could be misinformation. So, hey, we leave that aside for now. Hopefully there will be books, and hopefully we go back a little bit back to the Stone Age side where people and kids aren't spending too much time on the internet and they actually balance it out. Because I think technology has been great, but I think it's gone a bit too far.
Sorry to interrupt, Farzin. I saw a great cartoon a few years ago. There was some Stone Age people sitting around a fire, and the parents are saying to their child, I think our child is spending far too much time looking at that fire.
Oh man, I wish some people would get that joke. Hey, I did promise you we're gonna get. Well, what I'm coming up with is we're gonna call it a quick fire round. So you're only allowed to pick one.
Okay.
And give us the reason why. Okay, so I know there's hypotheticals in finance and money and all of that. And okay, so let's get started. Bitcoin or gold?
Gold.
Stable coins or cash?
Stable coins.
CBDC or cash?
Cash. Anything but CBDCs.
AI good or bad?
Both. I'm going to have my cake and eat it on that one.
No, please go through, because I was going to ask savior or destroyer, please, and I said pick one and why, but you've obviously explained AI. What are your views on AI?
I'd say bad, because human beings are naturally creative, and I'm not convinced that what AI is going to give us is going to be that ultimately that job and career positive. I think for at least the near term, it may do more damage than it does good. And also, I don't understand why it's worth so much when it's also introducing crippling cost to the energy infrastructure.
Energy infrastructure. I think the AI, what they're talking about in the media, has been overblown out. If I'm being honest, it is not the panacea that we think it is going to be. Yes, it's going to get rid of some jobs and make our lives easier, but it's not going to replace everyone in the economy, because, to be quite honest, some of these are language-based models.
Sure.
And I follow some of the other people who say it is not what they're telling us it is. Like, AI also makes mistakes.
Well, it feels a lot conceptually like the early days of the dot-com era, circa 99, 2000. We know what happened immediately thereafter. It's often said of the impact of new technologies that their impact is overstated in the short run, but understated in the long term. That's probably a fair way to look at it.
Yeah, absolutely. And just one last question. I think I know your answer to this. Can central banks save us from the coming crisis? Yes or no?
Well, central banks are the coming crisis. So I don't see how the origin of the crisis can be its savior.
Yeah, I say they're the ones who light the fire, and then they pretend to come through the other door and pretend to hose out the fire. So thanks for that. And I just want your views on something. As we're nearing the end, as we know and our audience knows as well, of this monetary system, I know the monetary system, the way it is designed, is coming to an end. But I want to ask this question. Money good or money bad?
It's a good question.
It's a random question.
There's a quote I remember from around 2000, and it was attributed to Bill Gates of all people. And it was that banking is necessary, but banks aren't. I'm not sure if that answers the question.
Yeah, that answers the question. Exactly right. Any book recommendations? You've obviously mentioned one book, which is
So 180 Degrees is top of the list for me, for anybody, with the caveat that it can be quite unsettling if you're not up to speed with what I think you and I think is going on in the world. The 180 Degrees by Fergus O'Connor Greenwood is must have. Another one, a historical one that I think people will find quite interesting and quite relevant. I don't know if you can make this one out. It's When Money Dies by Adam Ferguson. I had the privilege of attending the relaunch party because this, I think, book came out in the 70s and it was republished, I think, in the mid 90s or maybe probably more recently than that. But the editor of Money Week, then editor of Money Week, Merrin Somerset Webb, invited me to the launch party or relaunch party, and I met the author himself. But When Money Dies, the subtitle is the Nightmare of the Weimar Hyperinflation. Why would an asset manager be recommending a book about hyperinflation? Join the dots.
Join the dots, exactly right. And obviously your book as well. In hindsight, you wrote it in 2016. I'll just mention the book again, Investing Through the Looking Glass, A Rational Guide to Irrational Financial Markets.
It's the perfect,
just a view on that.
Perfect birthday and Christmas gift. It's fun for all the family. A puckish satire on contemporary mores.
And you wrote it in 2016. In hindsight, would you redo anything?
If I did it again, the only thing I'd add would be a chapter on Bitcoin or cryptocurrency, because that I knew nothing about it then. I don't know much now, but I'd feel obligated to write about it because it's obviously the sort of the asset du jour. But other than that, no, there's nothing really I'd change at all.
Has it come to fruition exactly as you saw it?
It's funny that. So I was approached by the publishers company called Harriman House here in the UK at the start of 2016. They just said, "Would you like to write? I'd like to write a book about investing." I said, "Yeah, I'd love to." So I put it together, and I think it was ready for launch in the autumn. And the irony is that I was desperate. Once I'd written it, I was desperate to get it out because I was so concerned that what I was worried about would happen before the book went to print. That's nearly 10 years ago. So I think what we're living through now, it's finally started to happen, but I'm willing to accept the charge that I was maybe a little ahead of some of these things before they happened, but better be early than late.
Exactly right. Exactly right. And the central banks and the governments have been able to kick the can a bit further. Doesn't mean
I think time's running
happen.
out now. I think
time's running out.
I think everyone's aware that they're throwing everything, including the kitchen sink, at these problems. But if something can't be solved, it's not going to get solved. So it's in a question of what replaces the current system. And well, you can at least infer from how we're investing for our clients and ourselves, I should add, what we feel about the world and what we're therefore favouring and what we prefer to run away from.
Yeah, fair enough. Hey, I did promise the audience we're going to finish up on a lighter note. When I say lighter note, obviously this has been fun for the audience and myself as well. But just to know Tim a little bit more, if you weren't in finance, where would you have been, or most likely where your career would have ended up?
Well, like I said, if I hadn't ended up in finance, I think I probably would have ended up in journalism. And so I think it's a bullet well dodged for everybody that outcome never came to pass.
Okay. What's your favorite quote or piece of advice that you have received?
Oh, that's a good one. If you're going to panic early.
That was the piece of advice you
That would
received?
be my piece of advice, yeah. Oh, actually, no, I can think of a better one than that, which is, and this is from the all-time best book on investing, which is The Intelligent Investor by Ben Graham. And there's a reference in possibly the appendix. For the 4 words, probably more meaningful and important than any others, this too shall pass.
Every bright spot everywhere. And the last one, because obviously my audience will know I also have a business called Success Simplified Limited, which is a financial consultancy. So I like asking my guests this. Tim, how do you define success?
Good question. Having as much free time as you want to have.
Thank you for that. I have tried to cover as much as I can for the audience. Is there anything else I might have missed, or you want to?
I think we've covered a fair amount of ground today. So But if we miss anything and the audience is aware of it, I'm happy to do a rematch.
There you go. It's always great to learn from you. Can you tell people where they could reach out and learn more about what you do and stuff like that? And your podcast also.
Our website is pricevaluepartners.com, and that's probably as good a place as any. I put out a weekly commentary there that you can read. It's all free. There's a link to my first book, The War on Cash, which was published in 2015, and you can reach the team there, pricevaluepartners.com.
Okay, great. And obviously the link to your podcast will also be there. I'll put it in the show notes.
Yeah, all of the commentaries have a link to the podcast on them.
Yeah. Hey, Tim, I cannot thank you enough, mate. It's an honor having you out here and having this discussion.
It's been great fun. I've enjoyed every minute. It's the best thing I've ever done with my clothes on.
Yeah, thanks. And hopefully I will jacket for that, mate. All the best, Tim. Thanks for your time again.
Thanks a lot.
Cheers.
Bye-bye.